Okay, so who can forget GameStop, AMC, all those meme stock things, that fun and games we saw last year, early last year. Look, whatever you make of WallstreetBets, that gigantic subreddit that sent stocks soaring, but also giant hedge funds seeking bailouts, it really just revealed something very important. It shone a light on the ugly inner workings of Wall Street. And a lot of that is really relevant to the crypto conversation. So we're really honored today to have the founder of WallstreetBets, Jaime Rogozinski, along with Matt Roszak, the chairman of Bloq. And they will be interviewed by our very own Tracy Wang of CoinDesk. Bring it out, guys.
This order. Should we? Yeah. No? People in the back.
Oh.
I don't know.
Hello. Good afternoon, everybody. We have a fantastic panel coming up. It's going to be about retail investing, but also about social coordination using technology, which is very much a theme in crypto. I'm Tracy Wang. I'm a senior reporter here at CoinDesk, so thank you all so much for coming to Consensus. And we have Jaime, founder of WallstreetBets, and Matt, who is the chairman of Bloq, which is a Web3 infrastructure company. So let's start off with, everybody in this room has probably heard of WallstreetBets, which has grown into this global investing phenomenon. But we want to hear the origin story, Jaime, from you. Did you know when you founded this how big of a movement it would become? And also, what were you thinking when you first started that subreddit?
So it's interesting. I certainly did not think it would become into this global movement. I suppose I had my secret hopes, but no, it was just really a group. And I've told this story several times, and I knew this question was coming, so I decided to add a little bit more context to this because I recently met the guy that developed the VIX ETFs, the 3x leveraged inverse, like these ridiculous instruments. And I remember I'd lost my job with the 2008 financial crisis. I'd been burned by this, and I was working in DC. I'd gotten a new job and passing the Occupy Wall Street movement every day. And as I start learning about, I get interested about the stocks or whatever, and I learn about these VIX ETFs, and I got angry. I was like, how, these big institutions, they just crashed the economy because of these fancy derivatives, and now they're just allowing people to trade these very, very complicated instruments. And I wrote this long, angry, self-absorbed dissertation that I was going to put on a blog and everyone was going to agree with me. But then I realized, no, that's no different than literally just occupying Wall Street. It's like a silent protest. So then I said, you know what? These things are available. Let's actually spark a conversation about taking these tools and taking all of this framework that currently exists and put it into the hands of retail in an unapologetic way, right? So step one, what should we call this group of people that are gonna also abuse the system? And Wall Street bets, right? This is a casino, let's go ahead and embrace it. And then just the story went on from there. People started showing up and it grew exponentially year after year. And I definitely surprised time and time again every time that something new happens on there.
Now, Matt, I'm interested because you are a longtime investor and participant in markets, and I'm sure, what did you make of the whole WallstreetBets phenomenon while you were just, a market observer, or maybe you participated yourself?
I mean, it was something that was a phenomenon that I don't think we give it enough credit, to be honest. And certainly from the Wall Street crowd, their initial reaction was, what is this? This is a bunch of unsophisticated retail investors doing stuff to damage things, and it was kind of brushed to the side from a traditional Wall Street perspective. And some people still hold that contention today. I think it's one of the, it's a significant imprint in terms of this, what you mentioned earlier, human coordination. And you think about these, human coordination technology, which, it's just tech, right? Like the Gutenberg press helped all of us distribute information much more widely than having monks, kind of copy, books and stuff. And it expanded all of our knowledge. And then you think about, us saying, hey, like Jamie, let's build Uber 20 years ago. Like we'd be screwed because, the iPhone, commercial grade GPS, payment processing, all those 100 layers of tech that made Uber when it came together, had that intersection of all that. When WallstreetBets shows up, it is a moment in time where you had Reddit, you had Twitter, you had communication, coordination, and then execution channels with Robinhood and other things where people could congregate. And you think about this, like you built a investing cooperative. It's like we grew up with cooperatives like Ace Hardware, True Value, or Land O'Lakes, like dairies or hardware stores would collectively buy stuff or sell stuff together to get a better outcome. This collective of WallstreetBets is like the coordination to do that, I think, is really crazy important and profound. And it also builds an analog to what's happening in crypto with DAOs and communities coming together. And the WallstreetBets thing was like, oh, well, let's save companies, AMC, GameStop, Hertz, all this stuff. Let's poke at companies if you're spilling oil in the ocean or otherwise, or have some fun. It had a lot of dimensions to it, but the power of that crowd was incredible. But again, it was based upon all those technologies being available and intersecting in that moment in time for WallstreetBets to be WallstreetBets. And I think we're going to see more of that kind of human coordination with technology that's going to be able to make an imprint. And if you think about these DAOs, these collectives of individuals to share resources, to make an impact, and I thought that was like, the first chapter in this thing really starting to crescendo.
It's interesting that you mentioned all of those factors, and I want to bring up another one, which was the pandemic in 2020, and WallstreetBets really, I think peak mania at around late 2020, early 2021. There's this narrative that people are cooped up inside, they're not able to watch sports, they're not able to go to the casino, and they were handed stimulus checks from the government, and they decided to ape into meme stocks and crypto on Robinhood and Coinbase. So how much did the pandemic play into the WallstreetBets and retail investing phenomenon? And do you see that as kind of dying out now that pandemic restrictions have kind of loosened? Or do you see this as a phenomenon that's here to stay?
I mean, it's here to stay. The box has been open, right? But there's been a lot of evidence that shows that what you say is right, like, and a lot of reasons, the stimulus checks, people staying at home bored, whatever. But what's interesting is I wrote a book and I published it like a year before, 2020, the very beginning, and I'd written it the year before where I charted the growth, like the number of members that are on the WallstreetBets subreddit, and I actually plotted alongside Robinhood, and I included it because of the correlation was so incredibly strong. But the exponential growth was there, right? The writing was on the wall was there, and the pandemic acted as an accelerant to a trend that had already been there. In other words, it's not because of the pandemic, it just sped up thanks to the pandemic, but what was happening was happening. But what I think is more interesting than just, do we have now a new group of people that has to share the poker table with these other people, is they've defined a different, they meaning retail investors, or WallstreetBets style investors. They've investors itself is a funny word. They defined a different way of approaching the market, right? One of the questions that I get really annoyed with is, well, now that the market has gone down, what are you going to say to all these people that are losing money? And the question is wrong, because the people that are joining Wall Street, that are looking to actively participate, they're like, well, Robinhood asks me with color-coded up and down arrows, which way is the market going to go today, right? Like, that's how you pick your stock options with an arrow. Like, well, let's go ahead and just make a meme out of it. Like, stocks only go up, and then they start going down. They're like, let's switch the meme to stocks only go down, and they're making money anyways. They're not waiting for dividends. They're waiting for Friday for their expiration date to come in. And what's interesting about this is it's fun, it's engaging, it's gambling, speculating, but that's like a gateway drug towards actually understanding about the market, right? So it's turned into this really net positive value, that while people are literally paying money so that they can play with them, right? It's an expenditure. It's not an investment. It's I will pay $100 to have fun with this. And then they'll end up actually reading about why Jerome Powell's speech on Wednesdays has something to do with their Apple investment, right? Like they're understanding monetary policy. Like it's really, really cool. And that to me is what's more interesting about this new segment of participants.
Yeah, and you see more of these participatory things come together like pretty dynamically. It's like WallstreetBets. Think about the Ukraine DAO to get charity and resources and money to Ukraine. Think about the Constitution DAO. Let's get a collective of people to throw some money into the pot and buy a copy of the Constitution. So these dynamic, kind of real-time, coordinated communities is going to be a very powerful thing. And we're just seeing the early kind of primitives of that. And obviously got a long way to go for DAOs to have the tooling, the governance, all those kind of chutes and ladders to make them more effective, and for the next kind of collaborative dynamic to come together to make that even faster. All those kind of things where the Constitution DAO, Ukraine DAO, et cetera, they had to build some stuff out that didn't exist before. Now there's going to be muscle memory and tooling that gets better and stronger over time.
Thank you. Let's talk a little bit more about the retail investor. So this talk is called, the little guys don't know, is the game rigged? And crypto is actually an asset class where a lot of retail investors who have, learned about Bitcoin early have done really well. And even as recently as last year, Doge and Sheeb, two meme coins, have been some of the top performing crypto assets. And we've heard stories about taxi drivers buying Doge and Sheeb and becoming millionaires and retiring. What role do you think crypto plays in just providing a more egalitarian access to kind of investment returns that these retail investors can't get from private markets?
Well, I mean, there's this thing called Carlson's Law, where innovation going from the bottom up is chaotic but smart, and innovation from the top down is very well coordinated but dumb. And I see that in crypto, where the crypto phenomenon is a bottoms up dynamic. It's like it's super retail, has been historically for the last decade, and it showed how having access to these new systems, these new protocols, these new tokens, it can be life-changing and can be impactful for the world, make an imprint. And I think that's now clear to a lot of people, that like this bottoms-up thing, we don't have to wait for a Google, an Apple, a bank, a government, et cetera, to kind of set the table for us. We could kind of build that table from the bottom up, and that's a very powerful kind of line of sight builders and people in crypto now have. And so again, that bottom up, that retail, that coordination piece is pretty powerful.
Jaime, I'm curious what your fans that you meet as when you go to these conferences, what they say about kind of the community that you've created.
Well, with regards to the conferences, it's funny because I also speak at just stocks only conferences, and I start talking all of a sudden about NFTs, whatever. They're like, what's an NFT? Why would somebody pay money for it? Whatever. Then I go to the crypto ones, and they're like, what's a stock? And why would somebody pay money for it? Like, where's the value? So it's funny, but it's also emerging. A funny story is I actually, around GameStop, I got a chance to meet Matt. He reached out to me, said, hey, I'm a big crypto guy. I'd love to talk some ideas with you. And I got on a Zoom with him, and he said, crypto's the future, whatever. And I'm sitting there rolling my eyes going like, yeah. I know that I have a lot of followers, like pump and dump's not my thing. Like, the crypto, Bitcoin's a coin. It goes up and down. It's cool. I like the technology behind it. And then now there's like Doge coins and whatever. It's just penny stocks to me. And he goes, you're very patient, you're really, really wise. He goes, why don't we talk in a year? And sure enough, a year later, he reached out to me. He's like, so how are we doing? And I'm like, dude, you were so right. Like, I didn't realize there was DeFi, these automated market makers. Like, I found out about these things, and I apologize if it sounds technical, but it is, and it's awesome. Like these variable leveraged ETFs that live on the blockchain that like solve the problem of volatility decay. And anyone that picked up on that will appreciate the sophistication that exists behind these things, right? So I'm like, why do stocks still exist? Like, why would somebody pay for, like, I'm completely converted and I have a bit of an identity crisis, but it's easy to resolve because it's evident that they're merging, right? Like the lines are blurring. You can already buy crypto stuff on the New York Stock Exchange. You can already buy tokenized versions of whatever equities, and so we know where things are headed.
And the other thing that's pretty amazing about WallstreetBets is, and being in the crypto world, when you're building a protocol, something that requires a community, right? Because it's like, great, you build the tech, you build that inspired decentralized storage or a new coin or any kind of infrastructure. You need a community of builders, community of participants, et cetera. And in crypto world, it's like tech first, and then kind of figure out that community piece. But you're literally starting with a community, and you have such a inspired table set that all the things that you wind up doing going forward here is going to continue to compound that community. So you have a massive advantage versus a lot of things that are going on in crypto, where people are walking around with pitch decks and great ideas, but the big gap for them is how do they get that community? And so I think it's super inspiring what you've cultivated, and now it's a question of where does this go? Does this turn into the barstool sports of investing and finance, and so you got all these kind of permutations now that you could help shape that community or give the community other resources that they otherwise didn't have, education, all these other kind of cool things to make them elevate their game. So.
And what's also really interesting about WallstreetBets is just the quality of the community that it was able to build. It's something that these crypto projects all are trying really hard to. And I know you both have spent time in both the Discord forum, but also now it's expanded to the Reddit, but now it's expanded to Twitter, Discord, and all of these other platforms. And one thing that's really striking about the community is how kind of the culture, there are memes about investing. People will post very personal messages about the details of their lives, their financial situations. So a lot of very private details, but they feel comfortable posting it in WallstreetBets. Actually, let's take a quick audience poll. How many of you guys have actually lurked in the subreddit or posted something on any WallstreetBets related platform? Okay, so we have a good number of people that raise their hands. And how many of you guys are just lurkers looking to, okay, some lurkers as well. But talk to us a little bit more about the community aspect. Like, why do you think people are willing to share such intimate details about their lives on these platforms, including probably a lot of times they also post their losses. Sometimes people will be down bad and they'll get messages of support from the fellow community members.
It's the refreshing authenticity. And surprisingly, I mean, and that's the thing on crypto as well, right? Like the parallel cultures, I guarantee you everyone, like crypto people like, hey, WallstreetBets stole to the moon from us. And WallstreetBets like, no, we came up with it first. Like, I'm sure they both independently came up with it at the same time, right? Like it's a logical, good meme. But at the end of the day, the culture, this internet, this form of interaction online is unique. And when something is authentic and legitimate, that's when the real connection is made. And prior to WallstreetBets, you have the people that go on, look at how much I won and look at how much money I have in my Lamborghini, whatever. But anyone that's actually done this is like, no, losses are part of this thing, and let's go ahead and share that. And now I can trust you more than the person that's perfect, right? And surprisingly, that ended up attracting actual professionals, both that are independent traders and institutional ones. That like, this place is cool because these guys don't even try to pretend, right? Like the nomenclature, let's YOLO, let's losses, whatever, you have your own terms, but it's that idea of saying, whatever I'm getting on here is the real deal, and now I feel like I can reciprocate with contributing in my own different way. So it's that connection.
Matt, do you have anything to add?
No, I mean I agree. I think that it's an authentic, real deal community. I mean that's like that's what you aspire, where people kind of cry on their shoulders, high five the wins. That is. You can't orchestrate that. It just kind of happens naturally, and yeah, It's an authentic community.
I want to add that some of my favorite posts on Wall Street Bets were around Christmas when the markets closed, right? Like people go on there and like they're just like Merry Christmas, whatever, even if you're not like celebrating Christmas or Jewish or atheist, whatever. You know, and they're just sharing their stories. I'm with my family now, and and it's a community in its purest form.
Yeah, and they could ask. I mean, the topic of this conversation, is it rigged? How does the little guy participate? But again, the collective could punch back as strong or stronger than the institutions when you do that in a particular way, and so it's that's the power of this kind of a community.
Well, recently in crypto, one of the big, sad events was the unraveling of Terra and USD. And within the Terra subreddit, there have been some posts of people, talking about losing their life savings, even some suicidal posts, and a lot of really dark stuff. And I think what Jamie mentioned about people, coming forward, and even professional traders talking about how everybody deals with this type of stuff. But specifically with retail investing, do you feel like on the regulatory front, and now regulators are looking at Terra, do you feel like there should be greater guardrails when it comes to protecting people from making investments in complicated financial instruments where they may not understand how it works?
So this is a sensitive question for obvious reasons, and when you say that, I remember that prior to Luna, there was a really tragic situation in which one young individual did a complicated trade he didn't fully understand, and Robinhood's interface also didn't know how to display the results of that trade correctly, and it looked like he was negative like $1 million or $500,000, and he took his own life. And that was a big deal, right? Because he hadn't actually lost that money, right? It was just a series of tragic events. And then you have situations where maybe the end isn't so morbid, but people still lose money, right? So the question is guardrails, and then that is a limit freedom or give freedom, right? Like you have casinos, and you have people that actually have gambling issues, and there exist support groups with that. But I'd like to have full faith in people in that they are going to act as responsibly or irresponsibly with whatever means they can. I've lost tremendous amounts of money gambling on the stock market, right? But I've never lost so much that I couldn't pay the rent, et cetera. And I'd like to believe that the overwhelming majority of the people are in that boat. And then that minority ends up doing two things. One, they get higher visibility because that's the story that is more interesting. And two, I feel there's a greater good. When somebody asks me, do you feel guilty about the money that's being lost? And I said, I feel a lot more guilty when somebody makes a lot of money in a high profile way. Because what happens when you see somebody go from like $1,000 to $100,000 with one trade? You're like, dude, I want to do that. I'm going to copy him. And all of a sudden you have people that might increase their risk tolerance thinking that they can do it too. And you have this copycat without thinking. Whereas when you see somebody lose $1 million, then you say, ooh, I better be careful, that can happen also. And so the collective good that ends up coming from a high profile loss, I believe, is better than the collective bad that happens from a high profile win.
I really like that. The Terra Luna collapse was real, 40, 50 billion. And what's interesting is like 2 weeks before the collapse, crypto hedge fund managers, out of Singapore, people that I know, like, and trust, we're talking about it as, we're talking about an investment. Like, do we put money in here? It's like, no, just stick it into Anchor and just earn 20%. People were, pretty much thinking it was a safe investment up until, it crashed. Sophisticated crypto people, which is kind of a surprise. And you see all this calamity, all this loss. But the reality is, DeFi is about 150 billion market today, probably a little less. This is a real money test. We are going through these stress tests, pressure tests, and out in the wild. This is not, behind some curtain and some beta. This is out in the open. And we need to do this out in the open. We need to stress test these new protocols if we want, trillions of dollars going through these pipes. And so part of this is, it's part of the ascent of crypto to kind of pressure test it in up markets, down markets, left and right, and kind of get these things to work. And the things that are engineered well are working well in these down markets. Things that are engineered not well, like Terra, blows up. And so, but this is not a 1 or 2 year thing. This is decades long of this crypto ascent. And on one hand, it's a pressure test. On the other hand, it was tough to see, because the other thing that we'll be talking about a lot more in crypto is the notion of what's a stable coin. Stable coin. And if it's not stable, well, what is it? If it's algorithmic, then it's not a stable coin. What is it? And so there's going to be, I think, a reckoning on some of the definition because of some of the risk. And so people don't think like this stable coin is my parking lot when I'm not trading. I want to put in this parking lot where it's going to stay stable. And when it breaks, we have to kind of change what those cookie jars look like and how we define them.
I just want to add one more thing about the resilience. Going back to the reason why I started WallstreetBets, the system collapsed, or the financial system. There's problems, there's weaknesses. Exposing those weaknesses, like you have millions and tens of millions of beta testers that aren't afraid of margin calls, right? Like these people take $1 million positions with a $3,000 deposit because they figured out how to make infinite leverage out of it. Like guess what happens? That happens. They break something that leads to hearings, better settlement dates, whatever, and they fix the problem. My favorite thing is what happened recently where, it's bittersweet. The guy that borrowed $1 billion for like a second, right? He bought 51% of the DAO, completely took all the money because he voted for himself, and then he returned the $1 billion before the transaction settled. Like, first of all, I mean, I'm sorry for everyone that lost money. Props to this guy for coming up with that. How you borrow $1 billion is beyond me. But guess what? That's not going to happen again, right? This guy exposed, it's called arbitrage. It's called a weakness that's now a little more resilient. So every time this happens, the system improves as a result.
So moving away from Terra and ending on a positive note, what's next for WallstreetBets? Where do we go from here? And Jamie, if you would like to talk about some of the projects that you have in the pipeline.
I can talk about some of them and some of them not so much. But look, it's expanding, right? It's going, when GameStop happened, I got thousands of messages, tens of thousands, and half of them were from the US, and the other half of it was from other countries. Korea, and like anyone that could relate in some way. Even a taxi cab driver was like, dude, I don't understand. He's from Spain. I don't understand anything about stocks or whatever, but whatever it is that you guys are doing, keep it up, right? Stick it to the man. It's that empowerment of the individual. It's that being able to take control of your own finances. Yes, it's fun. Yes, it's gambling. Yes, you can lose a lot of money. Yes, you can make absurd amounts of money, right? But that's like I said, it's a gateway drug towards leading to understanding and to actually taking control of your finances, right? Like I can hold my own against your average CFA level 3, but I don't use these multi-syllabic jargon. I use like a meme to represent the same concept that he had to memorize for the test, right? These things are relatively easy, and so what's next is let's continue to pass that knowledge. WallstreetBets, as it stands, is not a beginner's. It's not a beginner's place. For any of you that have joined relatively recently, like less than 8 years ago, you will have joined there and been like, what in the world are they talking about here, right? First, you got to learn the language, and then you actually need to understand what the strategies are, and a lot of people are discouraged. So I want to take it down a little bit of a notch, right, for all these people that want to be able to understand what takes place in WallstreetBets in whatever capacity they want to, but don't quite get it, and actually give these people an outlet to just go ahead and promote. And so this is going to be on multiple mediums. This is going to be on multiple languages, countries, channels, whatever it might be. But it's all with that same goal of expanding this community. And the advent of crypto, I might add, is a huge component of that. And I was just telling backstage about this embarrassing thing I have at the bank. Like, I won't actually give it's too embarrassing to share, but I used to hate people that say, I don't use banks because I can just live off of Bitcoin. I was like, that's obnoxious, right? Like, cool, advocate, but come on, use your Visa card. Now that I live in a different country, I have to do these things. I no longer have bank accounts, but I don't tell people because I don't want to sound like that, like deranged, like I'm, trying to promote a thing. It's so much better in the system. It's so writing on the wall. So WallstreetBets, as far as I'm concerned, is going to be very heavily integrating the concept of crypto with that same thematic of like individual community, finance, let's crowdsource ideas.
Matt, we still have a minute and a half left. Any closing thoughts on WallstreetBets?
No, I mean, I think, the opportunity is profound, obviously. And again, thinking about the depth and the health of that community, where it can go, and then how it grows too. Because if you're, a kid coming out of high school or college and you want to learn about investing, and I think you've got a huge opportunity and almost a responsibility to kind of extend it, because I think it went from this, this moment in time to a phenomenon, and I think it's got a long road ahead, and that's pretty exciting. And I know you're doing a lot of media stuff, book stuff, and other things around it, and I think that's just only going to amplify the opportunity for this community to grow. But I think the community is going to want more, and that's going to be your opportunity over the medium term.
Yeah, and it's clear that there is a huge demand for this out there, because I've gotten offers from CNBC and Bloomberg, and I sat there and I kind of listened to them just to see exactly what it is that they want, and they basically want to capture this audience, which is going to be the new majority, right? The people that consume their news on television and they want to hear about when the dividend date is, whatever, like that. Is phasing out in this new one sense. So like, hey, why don't you bring all the people that talk like you? And the moment that I realized that they're still trying to talk to people above them, like, here, you don't understand, this is an annuity with a tax benefit of, like discounted cash rate, whatever. No, let's go ahead and go out to the people, like, on the way that they like to consume information, in a way that they understand that information, and in a way that they enjoy it. Like, finance is so boring if you have to do it in Excel, and it's so much more fun, and it's just as knowledgeable if you do it in a funny picture.
All right, on that note, thank you so much. Let's give a loud round of applause for our speakers.